Thanks very much. I'm Cynthia Longest. I'm the Deputy Director with the Department of Child Services. So I'm what's called the 4D Director for the state of Indiana with DCS's Child Support Bureau. And I think I started talking to you guys maybe 3 or 4 years ago at the conferences. And as you can see, I've kind of expanded the group little by little. So I want to do some introductions. It's really important to me that you have, as Tammy said, faces to associate with names, because I know you get phone calls from folks. So a couple of things. To my left is Peggy Boggs. And Peggy recently was promoted to an assistant deputy director job in the Child Support Bureau. So she's pretty much my lead when it comes to working with you all, working with incentive expenditures, claims, those kinds of things. So I wanted to make sure that you met Peggy. She's going to speak after me briefly. To my immediate right is Eric Durnell. Eric's a project manager with the Child Support Bureau, and we've been talking about a tool that you all and the clerks and the prosecutors can use to submit for you guys the quarterly incentive balance form, and for the clerks and prosecutors in courts, the quarterly incentive expenditure and the monthly claims forms. We've been talking about it for a long time. It's taken us a little bit of time, but Eric's the project manager on that, and we're getting there. And so we wanted to demo to you. We actually went into pilot this week. Elkhart, Marshall County, I want to thank you very much. Randolph County, I think we're coming to your county next Monday. So far, so good. So we're hoping that this will be rolled out within this calendar year. Next to Eric Durnell, Eric Chandler. So we have an internal audit team. Eric Chandler, next to him, Jeff Miller, next to him, Chris Nill. And some of you have already talked to them over the phone. But they're our internal team who need to look at the incentive balances and the quarterly expenditures of incentives and those kinds of things. So I wanted to make sure you had faces to put with names there. And last but not least, at the end, Rob Conrad. So Rob works in our accounting operations with DCS. And he's the guy, when you guys get the emails with the remittance notices, those come from Rob. So when you have questions, we want you to still email that DCSAO inquiries@dcsin.gov email address, but actually this group, they're the ones that figure out what the answer to the question is. So wanted to make sure that I introduced everybody to you all. So the way we're setting this up is Peggy and I are going to talk first, part one. And I know that there are quite a few newly elected auditors this particular year. We know you guys had a really busy newly elected auditor training, and so I think we gave you a handout with some information. What we've tried to do is take that information, put it into the handout that you have in front of you, as well as combine a whole bunch of other information that we've talked about. So Peggy and I are going to run through this briefly. For some of you, you've heard it often and over, and hopefully we won't bore all of you to tears who think you've got this down, but we wanted to make sure that for the newly elected folks, we had something in writing handout for you to take home. Then we're going to spend the last part, and really the bulk of this, with Eric trying to do, like, again, fingers crossed, Eric trying to do the demo, and where we are right now is the monthly claims form. That's what's live. But we wanted you to see kind of the look and feel of what this tool was going to have. So he's going to try to do a demo. So that's the setup. So let's go into what's on this handout. If you look, and we're not going to put anything up on the board. I know you guys get lots of PowerPoints, so we thought we would just walk through the handout first of all. So the very first part of this is kind of the Cliff Notes version of auditors' responsibilities. So if you look at it, I'm not going to go into every single bullet point on here, neither will Peggy, but if you look at B, quarterly incentive balance form. So that's the document whereby you are reporting to us what you think the balances are in all of the various incentive funds. And this is something that we really need your offices to submit on time for us so that we can do the monitoring that we need to do in terms of what's going on with those 4D expenditures. The background on 4D is everybody I talk to, highly federally regulated, highly federally regulated. Because our federal partners provide 66% of the funding to the states, and they provide the little extra perk in terms of the incentive funds, they definitely take a close look at states and the local jurisdictions in terms of how they're spending those funds, making sure that we're doing right by both the federal funds, state funds, and the county funds that go into this program. On number C, you guys don't typically do, you never do monthly expense claims, but you might do quarterly incentive expenditure forms. That's probably the exception rather than the rule. But because you're so integral in terms of the balances on the incentives and trying to figure out what the clerk, prosecutor, or court have spent the money on, the last sentence on there, you guys are probably going to be our first line of defense in terms of contacting to ask questions about expenditures. So I wanted to point that out on the handout. And these three are probably going to be the ones who are calling your offices. Rob might call occasionally, but they're the ones who might call and ask questions. If you look at D, what we've given you here is there are basically 8 different funds. When you get those remittance notices from Rob, when we're sending 4D money back to your county, there are basically 8 different funds where you might put some of the money. So County General is the biggest one. If it's federal financial participation and it's just reimbursement of a normal claim, that goes into County General. The next number of funds are the really confusing incentive funds. And it took us a while to get this all set up. So there's 6 different incentive funds. There are 3 that are kind of what we consider to be regular incentive funds, and then there are 3 that are ARA. So you all may remember the American Reinvestment and Recovery Act, otherwise known as the Stimulus Act. And so for 4D purposes, we were allowed to temporarily match incentive money. And when that money came back, it had to go into separate ARA incentive funds. So that's why we ended up asking you all to set up 6 funds instead of just the normal 3. So the remittance documents always told you where to put them. As it stands right now, ARA's done. You still need to have the ARA funds, but those remittance notices are never going to say put money into an ARA incentive fund again. They still have to be out there. You're just not putting any new money into it. Then the last one that's listed here is one that we really don't talk about very much, but we've had quite a few questions about recently, and those are what we call the PCA funds. So back in 2005, I think, legislation was passed at the state level for the prosecutors' offices that mandated that they hire private collection agencies in order to submit state-owed arrears to try to collect on them if they had been having trouble collecting with it. So long and short of it is, prosecutors need to do that. There's money that flows back into the counties for the work that happens on those. And we've been looking at this, I think in the past maybe year and a half, we determined that there needed to be a separate fund set up for that PCA money that comes back. So we've listed that here in the chart of accounts. State Board of Accounts came up with a separate fund number for it. So that is the 8th fund into which you may need to put Title 4D money. And on the remittance document, it's noted up in the upper right-hand corner, right, Rob? And I think you highlighted in yellow now exactly what fund monies need to go into. So that's kind of the Cliff Notes version. The one thing under D, there's an asterisk. So when we talk about the ARA money, just so you know, what we have started to say to the clerks and the prosecutors and then the courts if they're drawing down anything from the Title 40 expenditure fund, start spending your ARA money first. Go ahead and spend that money. It spends just like the other incentive money. If you bring those accounts down to zero, then your county auditors no longer have to report on that fund. Once it reaches zero, it's going to simplify everybody's life. So we have started to say to them, spend your ARA incentive money first. And so we're fine with you also spreading the word to them as well. Gosh, if you're going to spend it, you know, you've got this balance over here in ARA. Why don't you consider spending that money first? They may be saving it for something special, and that's okay, but we're trying to make everybody's life easier by saying, oh, let's start getting rid of that. In this handout, it says separate handout, but we went ahead and stapled everything together. If you turn several pages back, it says page 7, and it says categories on DCS Title 4D related remittance notices. This is something that we pass out every year to you, and we try to update every year. So you should have had a handout from last year's conference and from the conference before. We've updated this. This is something that you can just pull out of this handout if you want to have it separately, but it goes into more detail on all of those incentive funds, the PCA fund, all of that that I just ran through. So I wanted to point that out, that that's a separate document within this. Then the other thing that is separate in the handout, we actually have instructions for the quarterly incentive balance document. And so that's on page 8, page 9. And then the very last 2 pages, these should look familiar to you, but the quarterly incentive balance form, so we've just given you a printout of that. And then the very last one is the quarterly incentive expenditure form. So within the handout, we just tried to put everything together in one place for you. So if you go back to page 1, that's the 4D funding streams. And again, just the Cliff Notes version. So as we've talked about, 4D funds, federal financial participation, 66%. That's A under Roman numeral 2. B, the performance-based incentives. This is where it gets really complicated. For those of you who are new, the way the state of Indiana gets incentive money on the child support program is by competing with all of the other states in 5 major categories. So we're competing with them on how many children have paternity established, on how many cases have a child support order established, on the amount of money that's collected on current support. So if a non-custodial parent is ordered to pay $100 a month, if we get $60 every month on that particular 100, we're at a 60% current support collections rate. So month by month by month, we have to say how much current support was owed on all of our cases, how much current support was paid, and that tells us what our current support collections rate was. If you turn to the next page, cases paying on arrears. So of all of the Title 40 cases in the state of Indiana, if $1 is paid on those, that actually goes towards an arrears that a non-custodial parent may have accrued, then that means that we've met the standard in terms of that particular performance factor. The 5th one is cost effectiveness. And so the federal government is looking to see, okay, the Title 4D program overall in the state of Indiana, how much did we spend versus how much money did we collect? And you have to have a cost effectiveness of at least 5 to 1. Indiana tends to be over that. We tend to be 6, 7 to 1. For a while we were ranked first in the country, which was not necessarily a good thing. Now we tend to be ranked about 7th in the country. So we're doing pretty well in terms of cost effectiveness. It's dropping a little bit. We're trying to watch that, because if we go below a 5 to 1 cost effectiveness, then it's going to it will negatively impact our incentives. There's something that's not listed here, which is something that I've started to talk to the prosecutors and clerks about a little more. It's something called a collections base. This formula, as you can tell, for the incentive money is very, very complicated. Looks at these 5 performance factors, but it also looks at something called a collections base. And it is looking to see overall in Indiana, how are we doing on our overall collections? It counts twice collections on any cases where there was any public assistance involved. And so the collections base tends to be something that's really important. In Indiana, our collections base is dropping. And it's partly because you all may know that last year the General Assembly changed the emancipation age in Indiana to 19 from 21. And so that means that child support is no longer owed on children who are 20 and 21. Obviously, that means not as much money's coming in. It's a pretty significant impact. So that impacts our collections base. We were one of only 3 states who had an emancipation age over 18. So for that, we looked pretty good compared to other states because we were collecting much longer. Now we're on par with them, and our collections base is going to be lower than it has been in the past. So that's probably going to impact our incentive money. A couple of notes. 3 years ago or so, we changed to what we call prospective incentive funding. So it used to be that the federal government figured out how well Indiana did. They sent the bulk of the incentive money to us, usually in December of every year, sometimes in January. At that point, the state figured out how much each county received and sent it out to the counties. As we did some research on this, and as Tammy said, we've gotten more and more involved in trying to figure out what's going on in terms of our federal funding and do things more effectively and efficiently. So we started doing research, and it turned out that we were really the only state doing it this way, that most of the states did what they called a prospective calculation. And so they sent incentive money out to their local jurisdictions on a quarterly basis based on what they thought they were going to earn. So we switched over to that formula. So that's why you all receive the incentive money 5 times a year. So you're saying, why 5 times a year when it's quarterly? You receive it 4 times a year on the quarterly schedule. Then we have to have a settle up 1 time a year. So when we actually get the numbers from our federal partners saying, okay, this is really how Indiana did, then we go through, make sure that each county gets the appropriate amount. And I'm happy to say that so far we've been able to send extra money to every county. We were very, very conservative when we figured out this prospective incentive formula. So you'll be getting that. Talked about the fact that there was no more ARA money coming through, so you won't see that anymore. The last thing is the private collection agency fee payments. I talked on that already. So if you all have questions about that, because like I said, I know that's new to you, definitely email our DCS AO Inquiries email address, and we'll be able to answer that for you. And then item 3 is the remittance notices. We've talked about that already, the fact that there's a handout. The thing that we need you to do for us is we need you to make sure that you're verifying that the amount that goes into your bank account matches what's on the remittance notice. So, I mean, mistakes happen, right? And we're dealing with 92 counties times multiple funds. And I don't know that we've had that many issues, but it always helps to have that verification happening on both sides to make sure that there's not an issue with the amount of money your county's receiving in either the expenditures or the incentive funds, any of that. So I think I will stop talking now and turn it over to Peggy, and she's going to talk a little bit about the monitoring and some of the issues that we found, as well as some basic rules on incentives. Thank you.
So to continue on with the DCS CSB monitoring, Cynthia touched base on it and introduced our internal audit staff to you. That was based on a State Board of Accounts audit finding where we were not really tracking the use of that county incentive money like we should be doing. So So we've hired the staff, and what they do is they look at the QIE, the quarterly incentive expenditure forms that come in from the counties, and then they compare it against the balance report. And if they find any variances, then that's when they'll reach out to the auditor staff usually, because they usually will ask you for a copy of your ledger or your transaction history to track what that issue is. And a few things that we run across is, on our examples, is we would find that incentive funds lost their identity. So what happened is money was moved from county general fund into the incentive fund, and, no, sorry, backwards. Incentive funds were moved into the county general fund, and then the expenditure was paid out. But then what happened is it lost its identity, so somebody could accidentally go ahead and claim that on the monthly expense claim and get reimbursement, which is not allowed because the incentive monies are not eligible for reimbursement. So we just want to make sure people were not doing that. The other thing is, on the page 3, is distributions were receipted into the incorrect fund accounts. And what we tried to do to correct that is make sure that our remittance notices are very clear, and the State Board of Accounts assigned fund numbers to it, and that's very helpful too. So by putting those fund numbers and the name of the account, those errors are going to be less than what we had in the past. Then there was transferring of incentive funds, and money was transferred from incentive funds into a non-incentive fund, but it was transferred before the costs were actually paid. And it's supposed to be on a cash basis. So we did provide some interim guidance that we have out available on our website that talks about using the cash basis instead of accrual basis. So if you've not read that guidance, you might want to look at that. So if we go to 5, report deadlines, there is a correction we need to make. So we're hurrying getting this together. So under the quarterly incentive balance report, where it says soft copy, just cross that out because there's no soft copy needed. All you have to do when that is filled out is do the signed hard copy. You can send it by mail or fax or scan and email that to the DCSAO inquiries inbox. And then the quarterly incentive, and that is due on the 30th day after the end of each quarter. So the next one is due, what, July 30th? Correct? Okay. And then the quarterly incentive expenditure report, as Cynthia said, that is kind of the exception to the rule. And that would be the soft copy is due by the 10th day after the end of each quarter, and the signed hard copy is due by the 17th day. That gives you a little bit more time to get the hard copy. And the same methods of transmitting it to us you can use. Now, one thing we want to be sure that everybody knew is that all county offices must report their quarterly incentive expenditures on a cash basis, which I mentioned, and that means that items already been paid by the county auditor. And so if you could provide a ledger or a transaction history report to the county office that utilize those funds, then that way they'll have that, they'll know that it's been paid, and I can now report it on the form. And additionally, expenditures should also be reported based on the actual cost and not use budgeted amounts. So, and number 6, we have basic incentive rules and guidance. There's a list here. I won't go through all of those. And the important ones is it's only to be used for 4D expenditures. And the purpose is to improve the 4D program. That's the whole basis for the incentives that the federal government was giving to all the states. And we mentioned before that expenditure of those incentives are no longer reimbursable. And it's okay to transfer incentive funds from one incentive account into another one. And we do encourage the county officials to collaborate together to make that determination, what's the best use of that. But just remember that that transfer needs to be reported on your balance report, your QIB. And if we go to page 4, I'm going through quickly because we want to leave enough time for Eric's demo for you, okay? Another part of when we got the audit staff is we decided that we needed really to give clearer guidance to the county offices, the clerks, the prosecutors, the courts, and the auditors. So we have a child support resource website that we have out there, and we've got a lot of information for our other county partners, and there's one piece of that we have available to the auditors and to the courts, and that is the administrative claiming link that we have. And there's a list of items that are on that website, the our guide that tells you all the information about claiming, interim guidance documents, and copies of the forms. We also have the report of what all the counties are reporting as their incentive balances is listed there too. So, and if you do not have access to that website at this point in time, Eric's our man. You have to contact him by email. His email address is there, and ask him to set you up for access to that. So, and then we have some upcoming guidance that we're working on, and those are listed under the section 8, and that's eligible conference cost, requirements for paying bonuses and other fringe benefits, and requirements for construction and major renovation. And we're also working on a presentation for backup documentation regarding personnel services cost. We will have a handout that will be sent, and then we'll also be offering webinars, and hopefully that's going to occur sometime this summer. And then we have our tool rollout and training. So later this summer, we're hoping that we can roll out the new 4D expenditure online forms tool, and that will allow you to actually complete these forms online instead of doing the manual paperwork. And you could submit that copy online, but unfortunately you still have to print it out, sign it, and send it up to us, a hard copy. We don't have electronic e-signature. And then we were going to be having our demonstration with Eric here in a few minutes. The next section is just a list of contacts, which we talked about, the DCSAO inquiries inbox, and then all these gentlemen here that are willing and able to help you with your questions. If we'll go briefly through page 5 and 6. This is just kind of showing you what our website looks like. I don't think they have all these listed on there. So if you're an auditor and go in, you're probably only going to see the link for the 4D claims incentives. You might have the other links, but you wouldn't be able to get to them, but I'm not sure how that actually shows up. And then on page 6, it actually shows you the different items that are listed there. So at the top, it shows your home page, and then you've got the claims guide and interim guidance. There's a category training, so if you click on that, there will be some training information in there. And then the forms, if you're wanting to get a copy of the QIB, you can get a recent copy of that from this website. And then the miscellaneous documents I mentioned, the county incentive balances that's out there for your viewing.
A couple things, and build upon what Peggy talked about. If you go to the page 6, typically when you guys get your access to the CSR, I believe you go straight into that page for the auditors out there that have requested access to the CSR. You can correct me if I'm wrong on that, but I believe you go straight into page 6. When this tool is available, and after you've been trained sometime this summer, that's the page you'll be going to access the tool. Okay, there'll be a link on there, and when you get trained and we pass out the material for how to walk through it, that's the page that you'll go to, and then there'll be a link on there that will send you to this portal link right here. We're using a tool that's built by IBM, the process portal here, and it's a tool that we've been using on a couple of other projects, one that we did for the prosecutor with license suspension, and now we're doing this for all the different expenditure claims that we have. I'm going to log in here, and as I do that, I'm going to talk about what I am doing here. Now, when you're in the county office, we have people set up for different roles. So just like you have in your office now, there's someone that prepares the form, and then there'll be somebody that will certify the form to say that it is correct. The person that certifies it will be the individual that puts their signature on the form. And so the role we have are preparer, and we have a role called certify. Let me see. I know, here we go. Oh, I'm not clicked in. Okay, let's try it one more time. We are in a basically a test environment, so if you see things that might look different, or if you see you know, numbers and stuff, just ignore kind of the numbers. They're just testing numbers that we have. So let's try this one. That's working. Okay. What IBM has as this process portal is we have what we call an inbox. An inbox is where the MEC, the QIE, or the QIB is going to be put into. Right now we have an MEC, and if you look under instance name right here, it's Prosecutor Bartholomew, April 2013. Right next to it tells you that's a monthly expense claim. When you're in here, you'll probably see quarterly incentive balance as the form that you'll be filling out. I'm going to talk mainly about this because this is what the form is, and I only have, I think, about 20 or 25 minutes. When we come out to the counties, we are going to come out not necessarily to your county, but to a county near you, and it'll be about a 2.5 or 3 hour training session that will walk through, explain the whole process, and get you on a computer so you can actually do the work yourself and see how it is, and then ask any questions that you have out there. But what you do is every month, a monthly expense claim form, a quarterly incentive expenditure, or a quarterly incentive balance will be put into your inbox. The preparer will come here and they'll hit this run button. It's just asking me if I'm sure that I want it to be assigned to me. Basically the way this works is there's one MEC out there for Bartholomew County to do, and so if I access it and I'm the one that's running it to work it, nobody else is allowed to go in there and try to work it at the same time. So it stops people from having multiple people working on the same document at once. There's ways of putting it back into the inbox, and we'll talk more about that in the training that you have. But I'm going to say OK here, and it pulls up a second page. The monthly expense, oh, there we go. Always with live demos. OK. The monthly expense claim form is a little bit different. It sounds like I'm going in and out here for a second. In that it has a series of what we call assistant screens for the prosecutors, the clerks, and the court's offices to fill out, to help them fill out the main one. For the quarterly incentive expenditure, and especially for the quarterly incentive balance, there's not as many entry fields, and so we just made it a single page. But I'm going to skip through some of these, but explain a little bit of what's on this page. Every form that we do will have basically a banner at the top here. It tells you the form that you're working on. Here's the name of the form. Here's the state form number. You have the county, your month, year, what office, and for the prosecutors, since they have 100% allocation, we're displaying what they have remaining in that, just for an FYI for them. Personal services, prior period personal services. What you're noticing here is when you click inside one of these entry fields, it tells you what it's expecting, a positive number in a certain format. So everything is right here hands-on. If you fill out a prior period personal service, you always have to fill in a comment. The other thing we have here at the bottom for each one of these assistant screens is the definition for what we're looking for personal services. I'm going to skip through a few of these because we go from personal services. We have one for supplies, shows you the definition. This is an easy way for the prosecutors, courts, and clerks' offices to walk through and fill out each one of these categories. And again, you have more information here. If they don't want to go through the assistant, you can hit skip assistant and it'll take you to the main page, which I'll be there in just a second. If you notice, the banner at the top is the same, and we have capital outlay, which are the 4 expense categories. The next one is program income, so they can fill out what their program income is. Has a definition here for what we're looking for, which we might modify those definitions as these guys determine or we realize that there's certain things out there that people aren't either utilizing or aren't filling out correctly. So we have the option of updating that as the application moves on. The next thing that we have is employee data, and something that's not on the monthly expense claim form as a state form, but it's something that we put into this application, and it kind of impacts you guys. We call it remittance notes. This is an opportunity if the Bartholomew prosecutor is filling this out and they want to write notes that they want attached to the remittance notices that Rob sends out, and they're filling the MEC out, they can put those notes in here. For an example is maybe they're claiming, and their claim is going to be for $10,000, but they want $9,000 of it to go back into the general fund, but they took $1,000 from a different XYZ fund that they want that money to go back to. Right now, I think if they don't automatically come and talk to you, they'll go talk to Rob, or they'll send an an email to him asking him if he can pass that information on to you guys and either put it in the remittance notices or send it on with the email. This is an opportunity for them to type in a message that where they want that fund to, where they want the funds to go, if it's not necessarily going straight into the general fund like it normally does. That will be passed along through this application. It won't show up on the state-approved MEC form that gets signed off, but it will stay in the application and it will be sent to Rob when the reports are produced at the end of the month and he's sending out the remittance notices. Clicking on Next will take you to the actual form itself. And this is going to be a similar look and feel for what you guys will have with the quarterly incentive balance. You're not going to have this many fillable spaces in here or be this long. But again, you see the banner at the top. They have program income. And what you can do is you type it in, you can tab over, and you just fill out what information that you have. I'm going to fill one of these out a little bit and just put in random information. Now you'll notice here that there's, when you scroll over the different categories, again it gives you the definition for that. Now for the monthly expense claim, if you click on this one, it'll take you back and you can start the assistant over if that's something that you want to do. We hit skip assistant, it takes you right back to the MEC form itself. But as you're filling it out, all you do is you fill out the expenses and whether there's a prior period. The system, just like Excel, calculates everything for you. It's showing you what the subtotal for the FFP claim is, what the total for the FFP claim is. It's your 2, which is your expenses minus any program income that you have. And then it's taken the 66%, so this is the amount that will come back as FFP reimbursement. Just like the current Excel spreadsheet, it asks for what your full-time employees are and what your part-time hours are. And I just put some stuff in here. Here are the comments. So if I had any prior period adjustment, you have to put in the comment what that prior period adjustment was, including the month, year, expenditure type, and adjustment reason, just like you have to do today. You have to give DCSAO an explanation basically for what those prior period adjustments are and give enough information in these comments that you don't get a call from Rob. Remittance notes are shown down here too, so you don't have to just do that in the assistant, you can do it here on the form. So after somebody fills this form out, they can do a couple of different things here at the end. Is you can either cancel out of this if it's something that you made a mistake on. If you want to start completely over, you can clear the form out. You can print this, but it will not print in a state format. So there's a state-approved format that's out there. It's the one that the prosecutors, everyone signs off on, just like there's a state-approved format for the QIB and the QIE. If you print it at this point, since it has not been certified, it won't print out in a state-approved format. It'll just print out in an HTML format. But it gives you an opportunity to print something out and review it or to take it into someone if they need to review it. You can save the document, which will save it and send it back into the inbox, or you can submit it. Now, I was telling you, is this person, student 51, is considered a preparer. So they can prepare the form. They're not necessarily allowed to certify the form because that's just their job to prepare it. Someone else needs to certify it. So I'm going to submit this. It's going to ask me if I am sure. So it submits it to the authorized official for review and certification. I hit yes. It's going to take me back into the inbox, and you'll notice that it's gone. So the form now is not in my inbox for me to work as the preparer. It's been sent to the person who is going to certify it. Now I'm going to log off because I've got to go in as the certifier. If I can. I know this is a lot of information, and I'm kind of going a little fast through this. And like I said, we'll be out in a county near you for training. This certifier in the training environment is a certifier for various county offices. But what we want to do is work off of this one. It's Bartholomew April Prosecutor, and it says Certify MEC, which is the task that I need to do. So if I click in here, it'll bring up the form. Now what you'll notice here is the certifier is not allowed to change any information. Okay? If the certifier needs to change any information, so if there's something incorrect about here, then what they will do is they'll simply not certify the document, and it will be sent back to the preparer. If they don't find anything wrong with it, then they can come in here and they can continue, which will continue to certify. For this demo purpose, what I want to do is to not certify this, to show you what ends up happening. As you not certify, you can actually type in a reason for not certifying it. And so you can just say number of employees should be 8, full-time employees, and just put in a note there. And so I'm going to write that. Should be 8. And if I hit continue, what it's going to do is send it back to the preparer. It allows you to pass this document back and forth, unlike you can do with the Excel, which the Excel you can, but this does it all through this system. And if you notice, it's now out of this inbox. Sorry for having to log in and log off, but I'm just trying to show that there's 2 separate people here that are working on it. One is student 51 and one is student 55. If I go back into student 51, you'll see it's back in my inbox to prepare. Now what happens is that got not certified. And so you're wondering maybe do I have to go into this application every day to see whether it was certified or not? No, not necessarily. Is if you don't regularly talk with the person who's certifying the document, what you can do is you can set up notifications. A notification could be sent via email that says that this document was not certified. Also, a notification can be sent when it is certified, when it's been sent to DCSAO, and when DCSAO has accepted it or not accepted it. So you have email notification if you want to do that, so you don't have to keep going into the application on a daily basis. Now, when I come in here and take a look, it's going to take me straight into the form. I've already gone through that assistant once, and this is going in there, but it has the notes in here for why it wasn't certified. Okay? So that would show me what I need to do, and I need to come down here and make the number of employees 8. So all the information is here at your fingertips. These notes will be saved, and what I'm going to do here is I'm going to submit this so that it's been corrected now, and it's going to go back to someone to certify. But what I can do too as a preparer, I can come in here and look at the progress of this form. This is a summary screen. This summary screen will keep track of every single document that you've produced through this application. So right now we're in 2013, but if we've been doing this since the beginning of the year, I'd be able to go and look at a form I did in January or February or March. And I can go back to as long as it's been done in this tool, you'll be able to go back and look at it. It will default to your county and office. So if you are a certifier for your county, but you certify multiple offices, which that is the case in some counties, then you would have a drop down here to look at which document you really want to look at. So this summary screen keeps a history of everything that you've done, and it's right here within the tool. If I search on this, what it will do is it shows you an audit trail of what's happened. On the 16th, which is new, so I produced this, and this was, typically it'll probably be system generated. It might say 40 expenditure administrator or something like that. But I know that student 51 submitted it on this date. On this date, it was not certified by student 55, and if I click on here, I can tell you what the notes were as the reasons for why it wasn't certified. Then I resubmitted it. I can also at this point view the form if I need to look at it. Again, you cannot edit it. After the preparer has prepared the form and submitted it for the certification process, it cannot be edited. The only way it can be edited is if it's been not certified or not accepted, and it can be sent back to the preparer to change. The one thing too is you can have both a preparer and certifier role. It's a little bit more complicated than this process here, and it's better to show that in the training class. So you can have multiple roles within your county, and we'll go into that more. But I just wanted to give you guys the basic understanding of what we have here. So you can either print this or go back. Going back takes you back to the audit trail. So all the information as it's going through this process. This will also show you when it was certified, when DCSAO receives it, when DCSO, if they reviewed it, when they've received your document and they've uploaded it into their system, when they've accepted it or not accepted it. Every status that we have in this tool will be displayed here for what is happening with that document. Now, since it was resubmitted by student 51, I'm going to go back in as student 55, who is the person that should be certifying it, and I'm going to do just that. Oh, okay. Looks like I only have a couple more minutes, so I'm going to show you this right here. Is the task is to certify. I'm looking over it. It looks good. I can't certify at this point. I have to hit continue. It says the certification process is not complete until after printing the form and clicking the certify button. So what happens is the form comes up. This is the format you might be more familiar with if you know what the MEC is. This is the state this is the state form. This is the one here that's at ICPR. And it's the same for QIE and QIEB will show up like this. So what you need to do at this point is you still can't certify until you've printed off the document. I'm not going to print here because I don't know where it will go. But if you certify, it's then sent to DCSAO. So again, I'm going to go into the summary, and I'm looking at the summary. Nope. This should work. And it shows that it's been certified. Certified means that somebody in the county has signed off on it and sent it in, and it's been sent to DCSAO. At this point, if you need to, you can reprint the form. Reprinting it puts it in the state format. Just viewing the form views it in the HTML. There's some more stuff that happens on DCSAO. They'll receive it. You still have to print off a paper copy and sign it. We don't have, like they said, electronic signature yet. It's something that I want to be working on. So, but that's basically what will happen. And again, you guys won't necessarily do the MEC. You'll do the QIB, and maybe some of you might do the QIE. But that's the process that you'll work. You have someone prepare it, someone certify it, and then it gets sent into Rob's group at DCSAO, and they'll be approving them.
Thank you. Thanks, Eric. I wanted to make sure we left a few minutes for questions. Eric mentioned electronic signature. We were hoping we'd have approval to have electronic signature in this particular tool by the time we rolled it out, but we haven't been able to pull that off. There are a lot of issues, several areas with having electronic signature. So we intend to continue to work on it because we know that it's difficult having to do this and print out a paper form and get a signature and send that in. So we'll continue to work on that. Are there any